The Ramirez podcast. We're finally back.
Finally.
Finally. Is your mic on, Jonathan?
Hell yeah.
Oh, okay, of course. Jonathan kind of adds those obnoxious comments randomly to kind of keep the lightness in the air, you know?
Yep.
Not so serious.
And I had a shot, so I might talk a little bit more
Shot of ginger, right? Help the gut.
with liquor.
Mac, how's it going today?
Feeling fantastic. Thanks. Pleasure to be here.
Thank you so much for coming. So, is this the first podcast you're on?
It is actually, yeah. This is my
Okay.
inaugural podcast. Thank you.
Inaugural. Okay, not bad, not bad. So, who is Mac Phillips so that people can know?
Yeah, thank you. Mac Phillips is actually a really down-to-earth individual. I was actually born and raised in Bermuda. I came to Canada when I was 18
Okay.
and always had the goal of going back to Bermuda and operating resorts one day. With the amount of hotels that are on the island, 4 and 5 star hotels, it just seemed like the natural progression into what is really the tourism capital of that part of the world. So when I came to Canada, I met a lovely young lady, went through business school and decided, you know what, there was a lot of opportunities to explore here locally. So I actually never moved back professionally, but like to travel back to Bermuda as often as humanly possible.
Oh, okay, nice. So,
Yeah.
how many times have you been back, you think?
Well, in the last 10 years, I used to go back at least 2 or 3 times a year, going with her as well to make sure she has the opportunity to explore the island and have lots of fun. Haven't been back since just before the pandemic, but prior to there, I was back quite often. Yeah,
Okay,
most of my
nice.
family and friends are still there.
Okay, wow. It's good to know.
Yeah.
And where do you currently work as a mortgage agent? Or what company are you under, sorry?
Yeah, so the company that I decided to join is Dominion Lending Centers. It's Canada's largest national mortgage brokerage, and our office is located in Mississauga, just outside of the downtown core.
Okay, are you usually in the office or you work from home or what do you prefer?
You know what? I guess when the pandemic began, we noticed, holy smokes, nobody's coming to see me anymore. So didn't really need as much
Is it
office
me?
space. Exactly, right? So didn't need the office space, so I vacated the cubicle, and now I just operate at the home office.
Okay, nice. So
Yeah.
are people doing more like phone calls you find for mortgages or Zoom calls or what do you find people prefer?
Well, because I noticed that a lot of families still preferred an in-person meeting, and I've had a lot of people say, hey, I'm not going to give you my money until I meet you. We really transitioned into a virtual setting initially. Majority of onboarding calls, any strategy call, client meetings were always done virtually, at least for the first 2 years. And then we realized Zoom got kind of zoomed out, if you will. People didn't need, that personal connection as much.
Yeah.
They can identify with you through the telephone as well through social media. So we were able to scale back the Zoom and just do a typical virtual conversation through telephone. So we're very rarely doing a Zoom meeting nowadays, but some clients still want to meet in person. So now we have that outlet at least available to us now.
Okay, amazing. And what makes you tick? Like what makes the hustle keep going? What makes you strive for more every day?
You know what? I think there's 2 primary passions that I have. The first is my family. As being the primary earner in my family, I want to make sure that I can give them things that I wasn't able to experience growing up. So my driving force and a huge why is my immediate family, as well as I love connecting and meeting with people. Like while I'm a numbers person, while I have a passion for success around figures, this is the thing that I have the most fun with: connecting, engaging, and meeting new people on a daily basis. So if I am able to spend a few hours on the phone, meet a new person, go out for dinner, that's a perfect day for me.
Okay. And before a
Yeah.
meeting, what do you what's your routine? Do you like listening to a certain type of music? Do you look at yourself in the mirror and
Yeah.
point at yourself? What's kind of like the Mac Phillips routine before a big closing?
Yeah, 100%. I noticed that I actually flourish with having a daily routine. So for me, my alarm goes off at 4:40. I'm in the
wow.
gym at 5 o'clock. By 6:15, I'm walking the dog, and then looking to spend a bit of time with my bride before she goes off to work at 9. So I've got a bit of time between 7 and 9 in the morning to have breakfast and spend that quality time. We typically don't get in the evening because business can go until whatever
course.
hour.
Yeah.
But that's how I really set up my day. And it's funny because I was only doing that 5 days a week, and I'm like, hey, on the weekend when my number one focus is family, I should be just as prepared and just as dialed in as I am on Monday to Friday. So I ensure that 7 days a week, my alarm goes off at 4:40 and I'm up.
Jonathan, we got to take notes. Did you catch that?
I didn't want to interrupt, but when you
That was
leave-
great.
Before you leave, give me your phone number. 'Cause,
Some inspiration.
I'm happy to share
Some
some.
gotta-
maybe an alarm clock call to
yeah,
Jonathan.
because if I wake up at 4 in the morning, it's to probably eat something, not to go for a walk.
So Mac, what did you realize? Like when did you realize, sorry, that this was going to be your career? Like did you go in full time right away? Did you start a bit part time? Like when did you realize, okay, you know what? This is what I'm going to do.
Yeah. So I was fortunate, having a full-time job. I was always curious on, firstly, how am I ever going to make a transition from a full-time career into another full-time business owner? I've talked to a lot of business owners, and I have a few close friends who are realtors, and like, Mac, it's a 24/7 job. You can't simply log off at 5. It's vastly different than what you're used to. So I actually had the ability to work full-time. I did my classes at night or on the weekends or, when I was hiding. And then when I was finished, I had the opportunity to go right into it full time because I scaled out of hospitality right away. Really good friend of mine actually was like, you know what, Mac, I need a mortgage broker. My other mortgage broker's not doing so well. Get your license and let's rock and roll.
Wow.
So right from day
What a
one, I
blessing.
had those connections already in place, and that's, I think, a lot of my success has come from that.
So you cracked like that what's it called, that monkey on your back, because usually that's what people go through. Like even like as a realtor, as a mortgage agent, like that first deal, and it's like you don't get one right away usually unless you're being coached by someone else.
Exactly.
Like if you're working under someone, you might get here's like a nice small deal to do, or here's like at least you can go.
The ones we can't get
you
done
know,
somewhere else.
Yeah, exactly. Here, go get busy, right?
Yep.
But that's great that you had like a friend that would trust you right off the bat. That's amazing.
Well, in addition to that, though, I think is one of the mistakes that I find a lot of business owners make is that they quit their job while they're at their infancy in their business. The last thing that you need while building a business is the stress around where money's coming from. So the second that you've got the business up and running, that's when you want to let that go.
Yeah.
And I think that's where I was successful as well. I was a lot of really, really patient in letting that full-time career go.
Okay. So now that you mentioned like a tip for people that are just starting, what would you tell Mac Phillips when he first got his mortgage license, if you could go back?
Yeah, for sure. Slow down. Be really, really patient in the people that you want to attach your name to and the people that you actually want to do business with. I think when you're really early on in your career, you're hungry. You're like, yeah, just bring it on. Any piece of business, I'll take it.
Yeah.
But you really want to avoid doing that, and you want to set up early on, or at least I would if I could do it again, is my no list.
Okay.
The business that I don't want to take on because either it's not best suited for me or it's going to suck my time. You really need to be able to focus your energy on essentially that avatar client and make sure that that's determined really, really early on. There's going to be a lot of business you're going to spin your tires, or even there's someone else that's fully invested in that. Let them deal with that if they're fully invested, and allow the business that you're really good at doing, manage that and do that well. So if I could scale back, I would look at what business is best suited for me, and that's where I am right now. Pre-construction, investors, and business owners. Those are the 3 pillars of my success. I let other people fight over the scraps otherwise.
Gotcha.
Yeah.
Wow.
Yeah.
Amazing. So moving forward, we had an announcement today. Good news, bad news, neutral news. How would you classify the Bank of Canada announcement today?
You know what? I think it's stellar news. First thing is that I don't think anybody really expected rates to go down as early as we are right now. So anything but up, I think, is positive. Anybody who's still on a variable, who has yet to lock in, they're still feeling the pain. Another increase would have certainly sent us into a guaranteed recession if we're not already in one right now. So I think that by having lateral interest rates definitely bodes well for the people who have been able to catch up to their budget. Most people are most likely in a position now where they have been able to adjust other things. Maybe eating out has gone away as much. Maybe, your Disney membership has gone away. And now you have the ability to make those mortgage payments. So as long as we can, hold on where we are, I think we'll be okay.
Yeah, I just laughed because I remember there's I'm not going to name them, but there was a person of government.
There was a politician.
That said,
Just do it.
we suggest you cancel certain subscriptions like Disney on to save money. And then people are just like, weren't having it. She ripped her to shreds, poor lady.
Exactly.
Okay, so the people that don't know, what's the Mac Phillips explanation of variable and fixed?
So the explanation for variable and fixed, I think, is really coming down to why you would ultimately choose either or. So families or investors who don't mind a little bit of fluctuation with their payment, where they're thinking more of, what's this going to cost me over the life of the mortgage, or what's this going to cost me over my term? And they're okay with a bit of fluctuation, knowing that the flexibility of making changes to the mortgage, as well as the potential for savings when rates come back down, outweighs the staticness or the confidence around that monthly payment. The average home investor in Canada, they feel really confident. They just sleep better at night knowing that their payments are not going to change. But that's what the banks want you to feel and want you to do, because the longer you lock in, statistically speaking, the more money that they make. In Canada, the average home buyer gets the itch to buy and sell between 36 and 40 months. But then at the exact same time, banks encourage you to take a 5-year fixed, which is, in a disparity to what's in your best interest, knowing that you're going to pay a penalty most often. So what we're noticing as a shorter fixed typically gives you a lot more reprieve on the ability to make changes. Typically before, currently a 1-year fix was a really aggressive pricing. So you actually got the best of both worlds. So if there's any families thinking of, you know what, do I go into a fixed, do I go into a variable in the current market? I'm a huge advocate of a shorter fixed. Let's ride out the storm. Who knows what if Bank of Canada is going to do another announcement soon and raise rates again. Let's get out of the storm, while the dust is still settling. Let's give you some confidence, make sure you sleep well, and then we can look at renewing into a variable or even a different solution 24 to 36 months. That's where I believe the sweet spot in the current market is.
So one thing you mentioned was penalties.
Yeah.
A lot of people don't realize or don't know. I've noticed that there are penalties when you move. When you break a mortgage.
Yes.
Right.
Yes.
So can you explain how that works? When there is a penalty, when there might not be a penalty, for those that don't know.
Yeah, absolutely. So whenever you take on a new mortgage, whether it's fixed or variable, if you want to close out that mortgage or essentially pay it out early, there's always going to be a penalty. There's one lender in particular that I won't name names, but if you have questions, reach out, where after the 3rd year in a variable mortgage, there's no penalty to make changes. And the reason being is because they believe that they're firstly the most competitive on pricing, but if you want to shop outside of 3 years, they believe that you should have the ability to do so. But with respects to the penalty, if you say you take a 5-year fixed, for argument's sake, and make a change between 3 and 4% of the mortgage balance is your penalty. So here in the GTA, with the average family is a $400,000 to $500,000 mortgage, that's a pretty big piece of cash that you're going to let go from your equity if you choose to break that mortgage. If it's a variable, it's 3 months interest. So really easy calculations. You can do the math of what you're paying on an annual basis for interest for your loan, divide it into 3 months, and that's what your variable penalty would be. But there are some very creative ways to get around that. Like as an example, when I'm working with families and I understand that they're in a position in their life where they need the flexibility to buy and sell, we're going to look for a lender that allows you to port your mortgage. So you can grab a mortgage today, buy and sell. It would only cost you the legal fees and the discharge to move it over.
Okay.
Not even discharge, because they're actually keeping that same mortgage. So just the legal fees to move it over. So that would save you tens of thousands of dollars depending on the purchase by simply using a lender that is strategic in making sure that you're first and not what's best for them. And why I say that quickly before we move on is because a lot of lenders don't even offer porting, where they don't allow you to move your mortgage to another lender.
Yes, very important.
They don't even offer bridging. So for a lot of families, and as a realtor, do you want to recommend your clients to buy and sell closing on the same day? What if the sale doesn't close? Now the buy doesn't close, and now you're in a hotel. Whereas we could have had a
and
buffer,
a possible lawsuit.
right?
Yeah.
Best case scenario is a hotel,
Yeah.
right? And then you actually have the ability to have that gap where you can give yourself more time to bridge that shortfall if there is anyone.
Wow. A lot of things to
Yeah.
take note there. So obviously there's A lenders and there's B lenders.
Yep.
Out of the A lenders, it doesn't have to be an exact number, but how much percent would you say offer flexibility when it comes to penalties? Like if you had to guess at the top of your head.
Yeah, I would say I could count them on one hand.
Oh, wow.
Yeah, the majority of lenders are very rigid in the penalty because that's one of their prime money-making products or I guess solutions is around the penalty. Like as an example, you'll see today there's a lot of lenders that are really proactive in marketing and advertising cashbacks. Please, we'll give you $3,000, $4,000, $5,000 cashback. But right down at the bottom in fine print that they know is hard to see, actually says that if you break your mortgage a day early, it gets clawed back in its entirety. So it sounds great on the way in, but they know they've got you on the way out, along with the penalty.
And so I kind of relate this whole penalty situation and terms on mortgages and like houses to cell phones and cars.
Okay.
Because I heard that like even with cars are becoming like cell phones is something we flip or change.
Yes.
Especially if you're like a business professional or you need it for work every year, 2 years, 3 years maybe. Like if you're doing like high quality content, like within a year or two, this one's not going to match up with the 4K or 6K
You're
or
gonna want an
20K or
upgrade.
whatever it
Yeah,
may be.
yeah.
So you're going to want the new one. And that's what one of my dealership friends kind of explained to me is that in terms of cars, especially the newer generation, we get bored very easily.
Yeah.
So leasing is probably a better option for you because most people, I think he said, switch their cars between 2 to 4 years.
Okay.
And I feel like that's also with mortgages. It's like a lot can happen within the 2 to 4 years. You can have a baby or two or four if you wanted to in 4 years. You could get married, you could get divorced, God forbid. Like so many things could happen within that time. So
Yep.
it's actually something that I really wanted to talk about, how the penalties work.
Yeah, I think the penalties are certainly something that a lot of families nowadays are a lot more hip to, especially homeowners that have been burned once or twice. Now that's something that they ask proactively. Like when I'm having a conversation with a client, typically they're only looking to understand one thing, which is their payment. And now when you talk to a lot of families, they're asking, okay, so when I buy and sell, what does that look like? How am I going to be impacted? Because I want to make sure I'm keeping my equity. So there's actually certain lenders that we can recommend, the few that I think of that are you can actually negotiate your penalty, especially if you're staying with them. Like one in particular that comes to mind, I had a client just recently where they wanted to pull some cash out of the home. They had a 5-year fixed, and they actually wanted to stay with that lender. So I called them and said, hey, you know what? We're not leaving you. We're staying with you. We're actually going to give you more money. Like, what are our options? I was actually able to negotiate the penalty down by 50% for that family.
Oh, wow.
Keep their business with that same lender and obviously make them happy as well. So that's a rare instance that you can't find often. Yeah.
Another tip I wanted to talk about, Mac, and you tell me if this is true or not, but I heard that a lot of, like what you just mentioned about bringing down that penalty, a lot of lenders will actually negotiate with you. Is that true?
So if you're thinking of some of the big banks, I know a few that are willing to enter into the conversation more upon renewal. So let's say that, your renewal's coming up, you've gotten a rate. They know you're shopping around. They know that your head's not in the sand. So if you come to them and say, hey, the big blue guy or the big green guy is going to give me something more competitive or as competitive, they want to be able to match or beat that. The mortgage market today is super competitive. As new big banks enter into the marketplace and some actually swallow up and consume others, they know that the biggest anchor to make money is that mortgage. It's not so much the mortgage that's making the money itself, but it's an anchor product to begin selling you insurance, credit cards, lines of credits, all these other things that now are investment tools for the bank.
Oh, you can pay your mortgage, use a credit card.
Well, what's the likelihood you're going to move your mortgage if you've got your investments, your insurance, your line of credits, your credit cards, everything with one bank? It's going to be challenging for you to move it, and they know that. So they get you in real cheap, real easy with the mortgage, and then they begin to sell you these other products. I've actually had clients call me and tell me, hey, the day after my mortgage closed, they call me to sell me stuff. So we obviously want to be very curt with using those lenders, but if they have the best solution, we just prepare the client for that. Hey, you don't have to do business with them, but just so you're aware, this is what's going to be happening after closing.
Wow, good to know.
Yeah.
So let's talk about tips for small businesses and tips for people, let's say, that are employed by big corporation or a company.
Sure.
What kind of tips would you give on a personal side, and what kind of tip would you give a small business in terms of maybe doing their taxes or applying for mortgages?
Yeah, for sure. So that's a loaded question. So with the business owner side, I find that the biggest thing that they need to understand is how are you going to manage your finances for this business? And it might sound easy, but a lot of business owners don't understand the most tax efficient ways to be able to pay themselves or manage their business. There's a really antiquated way of looking to qualify for a mortgage that I've heard other business owners tell me, and they would go to their accountant and say, hey, accountant, I want to buy a house next year. The house is $500,000. How much do I actually need to declare on my taxes to qualify for this house? Right. And that's a very antiquated and old way of thinking about qualifying for financing, because with the amount of money that you would need to pay in taxes to qualify for that same mortgage, there's actually other ways that we can say, you know what? We don't need taxable income. We can have you manage your business on what's best for your business, and I can still get you an amazing mortgage. So for business owners, my first advice would be manage your business what's best for your business. Don't worry about qualifying for the mortgage. You'll always get an amazing mortgage, but you can't qualify unless your business is healthy. So don't worry about T4ing yourself. Don't worry about paying out dividends. Don't worry about not declaring expenses. Whatever is best for the healthy or the health for your family and your business, do that. And we'll still be able to get you amazing solutions for lending when that time comes. For anybody who is looking to purchase a home and they're maybe salaried or even hourly, a couple things just to keep in mind is that as the second that you've passed your probation, you can buy a house if you're a full-time salary professional. You don't need to wait 2 years. You don't need to wait even 1 year. The second that you're past probation, you can purchase.
So the 2 year thing is kind of like old news.
That's definitely a myth. Yeah, 100%. The 2 years thing is more for a business owner that's using tax returns to qualify. We can touch on that a bit later, but I've even had clients of late where they're still on probation. And if they're moving laterally between 2 jobs in the same career, where's the risk? Like, I'm moving because I wanted to, not because I'm not good at my job. So as long as you are in the same industry, you're not, moving from chef to musician, you can buy even on probation. And I think that's something else that we can debunk
And
as well.
I'm assuming that as long as the salary is similar or better. Or
Yeah. As long as we can present that it is based on my benefit and maybe moving closer to work or home rather, or whatever is best for my family, that can be justified. I think a lot of the solutions for lending today, it's about the story less than it's about the numbers. And I think a lot of people don't realize that it's actually about you and your family and presenting you in the best light possible. The numbers we can improve with the story, not vice versa.
There's also, I guess, a new age of lenders looking for flexible criteria for possible clients, because we're kind of moving away from the typical, oh, I'm just a doctor and I do this, or I'm just a teacher and I just do this, or like there's like people a lot out there that are opening either opening up their own small business, or they have different side hustles where they kind of maybe rack in some cash through here, or they might do Uber on the side, or etc. So do you find that lately lenders are becoming more creative with what they're offering?
I think that lenders are finally becoming more hip to the fact that the mortgage market and the employment market in Canada is ever changing. If they want to be competitive, if they want to be able to service Canada and they want to be at the forefront of lending, they need to adapt and evolve. And they're finally noticing, like as you alluded to with Uber or Skip or any company that where you're a driver, it was actually treated very negatively with respects to qualifying for a mortgage. Now it can be used like any other job, because they understand that the masses are using this as an opportunity to get into a home. They need to bridge the gap on top of their salaried income. So if it couldn't be used to get into a home, it would be fruitless. So a lot of lenders are now becoming hip to opportunities for those kind of folks.
Okay. And let's talk about corporations, like small businesses incorporating, let's say from a sole proprietorship or from a partnership or whatever it may be. Since you have a lot of understanding of that level or field, what is your suggestion for small businesses that are considering incorporating?
Absolutely. So the decision around changing your business from a sole proprietorship into a corp has everything to do with the numbers. It should have nothing to do with how you feel about your business or the kind of setup of your business, unless you have partners, and that's a different story. But if it's just you, it really comes down to one thing. What is my net income? How much taxes am I paying to the taxman? Can I reduce in such a way my exposure to CRA? So the way that it works is that if you're finding that it is more beneficial to have a sole proprietorship because you only have $30,000, let's say, then yes, you're only going to pay tax on that 30K. But if you find that you're now in a higher tax bracket, let's say 50, 60, 70,000, you want to be able to keep as much money inside the corporation and not pay taxes on it. So that's when you start thinking, okay, I'm in the 20% tax bracket for argument's sake. There's a better way to do this. Corporate tax is 12%. Why don't I then set up a corporation, leave that 70K that I'm not paying myself out, and leave it inside the corporation, pay corporate tax? So the way that it works is, and to be tax efficient as possible, is that you want to leave as much money in the corporation as possible. You actually don't even need to T4 yourself or to provide dividends. That's an old way of bringing money out of the corp, because once upon a time, you could only use the income that's on your personal side. Let's say, your corporation did $1 million in income. You've paid yourself an $80,000 salary. Back in the day, you could only use that $80,000 salary to qualify on the personal side. Now, we can actually add that salary to the net that you still have in your business. So you actually don't even need to pull anything out. You can pay 12% corporate tax on that income and use 100% of that retained earnings towards the qualifying of a purchase. So
also, depending what you pay yourself out, you would be taxed as an employee, correct?
That's exactly
Depending
correct.
what bracket you fall into.
That's exactly correct. And that's why pulling the money out through dividends or through a T4 would actually be counterintuitive, because now that $80,000 is going to be taxed like a job. So that's what, 25%? Whereas you can leave that 80,000 in the corp, pay 12%, and only pull it out for business expenses versus pulling it out to live on or to have fun with.
Did you ever aspire to be an accountant?
No, I haven't.
True story, though. I feel like Mac, out of a lot of mortgage agents that I know, and it's no disrespect to anybody, obviously it's just a fact. I feel like like a lot about accounting and then taxes.
You know what? I think we're reading tax returns on a daily basis. As someone who is fully invested in working with business owners, the only way to understand how to best help them is to understand the tax efficiency of being a business owner and how to manage that. It's literally what we do day in and day out. And in addition to that, actually giving guidance to the business owners to say, hey, you should actually manage your business in this regard to be able to help yourself qualify. Gotcha. Why are you shooting yourself in the foot? So that's part of it. It's not only qualifying a mortgage, but it's actually advice to business owners on how to best benefit their business operation.
So what would be your message to the sole proprietor, the salary jobbed person, or the corp owner if they feel hopeless or don't know where to start?
Okay. So the first thing is that I believe that the majority of people will feel hopeless or be afraid to take that step into a dark room because they can't feel the switch on the wall. And the switch on the wall for the average client and for me is presenting your numbers. The second that you understand your numbers and you can visualize the plan, that's when I think all the mystique comes away and the anxiety levels immediately come down. I talk to families all the time, and the first question is, can I get pre-approved? Will I get pre-approved? And it's like, at the end of the day, you'll always be pre-approved. Mm-hmm. It's just, will the number be sufficient enough to get you into the home of your dreams or the home that you're looking to achieve? So connecting the dots that every family can be successful. Every family can get a home pre-approval. Mm-hmm. And if the number is not where it needs to be, then we put a plan in place. We meet with your financial advisor or other partners to make sure that that plan, 12, 24 months, is done for you, so there is light at the end of the tunnel. So by starting with a pre-approval, starting with the conversation, it's never too early. No matter when you want to buy, let's have the conversation so that you understand what needs to be done or what needs to be flexed to get you where you need to be.
Perfect.
Yeah.
What about tips for anybody that wants to become a mortgage agent? What would be your number one tip? Like, don't do it, or?
So as a mortgage agent, obviously you're self-employed. You got to have a thick skin. And you've got to be a self-driven person. If you need your manager patting you on the back, or you need that email coming in to say, hey, where's that 5 o'clock report? You're not going to be successful as a business owner. If you can determine exactly what your why is, and that why is like a shining neon sign in the corner, and you're constantly going to be reminded of it, and you have the drive to get up every day and a passion for people, then you'll be successful. Not to say that you don't need to be good at numbers, but the numbers piece is very, very small. The relationship piece, the marketing piece, connecting with people, that's where you're going to find the success, and that's how you're going to be able to build a long-standing, successful business.
Amazing.
Yeah.
And where can people find you, Mac, or how can they contact you?
Yeah. My Instagram handle is @PhillipsMortgage. Feel free to follow me. I got great information being put out every day on mortgage or finance information. And, feel free to give me a call. I pride myself in taking those calls, so feel free to reach out anytime.
Perfect. So for all your mortgage needs, if you have any questions, like Max said, it's never too early to plan. So feel free to reach out to him either in the DM or you can contact him on his phone number as well. What's your phone number for the people?
Really easy. 647-5700.
Amazing. 647-5700. I even memorized that quickly. That's perfect.
Could you say one more time so I could, because I have to call him. We have to talk.
Stops the live, calls him right away.
Yeah.
I got that from a pizza place. I was going out of business.
Perfect, Mac. Thank you so much. And last question for you. Do you enjoy Big Macs or no? Do people ask you this a lot?
That was actually my nickname growing up. So yes, I definitely love Big Macs. Thanks for asking.
All right, man. Thank you for a great time. Thank you for taking this interview.
Appreciate
Jonathan, thank you again for your time as well. Your patience.
Thank you, Jonathan.
Everybody's patience in the room. And we'll be back soon with some more information. So another entrepreneur, another business that you can learn about. So everybody have a great evening and talk to you soon.
Thanks for having me.